Hello traders, welcome to stage 3, which is the order flow section. As with every stage, as we've been doing, let's just have a quick look and take stock of where we are, what we've learned so far, what's left to come, and where this section really is as part of your institutional approach to your day. You're going to know anyway, because obviously I've spoken many times about it, that order flow is obviously a very small part of your sort of prep for the day. And that should be obvious now why that is, because now that you've started taking this bird's eye view, you've been on the depth of market. You can see the depth of market is incredibly microscopic, and all the things that are happening on the depth of market. And at the end of the day, what is the depth of market? It's just the raw data. And what is the footprint? What is the cumulative delta? Well, as you'll see through the section, it's just different forms of the time and sales of the raw data anyway. So the point is, all of that stuff, the order flow, whilst it's incredibly useful, it's more useful the way that we will approach the market, i.e. building a hypothesis for the day, looking at this big holistic bird's eye view. It's really more just for fine tuning, and I've kind of hinted at this in the entry versus exit section that I did in stage 2. And I've said that, unfortunately, and you can probably see it now, the focus of most traders is in completely the wrong place. Whilst this is obviously it's important, if you can get this and this right, the 90%, I'd take that any day over, not obviously sloppy is a strong word, but not paying much attention to entries. I'd much rather have obviously my context and my hypothesis strong, and yet maybe be a bit loose with entries. And I think that's the perfect combination, because I've spoke about it many times. The market is by no means going to give you the perfect opportunity, especially at that microscopic level. You can really see, and you've seen it yourself, human emotions are really reflected, exacerbated, magnified at that sort of level of detail, because obviously there's less chance for macro factors to affect that. So the things that are going to be affecting the market at an incredibly microscopic level are things like obviously systematic trading and human emotion and so on and so forth. The drivers behind those type of trades at that level of detail are not necessarily going to be things that are logical to you, especially not to the human mind. So that's why it's very difficult for us to have an edge there. Talked about this to death in stage 1, auction market theory, obviously talked about it a lot in stage 2. And therefore, my point of all of this is that it's important, but you've got to understand where in the process the order flow is. I know incredibly successful traders who don't really pay much attention to order flow at all, but when it comes to context and obviously building the developing context on the day and combining it with the larger context, these guys are incredible discretionary traders. Now obviously I've traded on the depth of market, and I know incredibly successful depth of market traders maybe a few years ago, but more and more now, as I've said. This sort of end of the spectrum, here, is much more, let's be honest, machines now with the way technology is. There is no edge, if I'm honest with you, for human beings at a discretionary level. At the end of the day, things like absorption and aggression and all these things which we discussed in the dome section, those things are being spotted by machines in milliseconds. You just don't have the hand-eye coordination. It's getting more and more advanced. Your edge is really, you've got a massive edge here. This and this area. If you can, really build a strong hypothesis for the day, and I've talked about this a lot in stage 2, you can afford to kind of be, again, sloppy is not the right word, but you can afford to be very relaxed about entry and exit, and really let the context do your hypothesis, let that do the work for you. And ultimately, if you've got confidence in your hypothesis for the day, at the end of the day, you've got to show that, right? You got to show that when the market's not always going to give you this perfect pullback to get into or this perfect entry to execute your hypothesis. Sometimes you just got to go with it. And I talked about this in the entry versus exit. And I thought it was important that obviously I highlighted that again at the start of this section, that look, I've talked incredible detail about order flow, right? I've done a whole foundation course on it, which was necessary because you needed to see how is the volume profile built basically from scratch, and it's giving you an incredible understanding. How is the VWAP built? What is the VWAP? It's based on market orders. You needed to know the market orders, but you've got to be really careful with order flow, that you recognize it for what it is, that it is just fine tuning. And I guess the final thing I'll say is, the reason I say this is because, guys, you're going to spot absorption, spoofing to some extent, fake orders in terms of pending orders, bids, offers, supply side games, and you're going to see it everywhere on a chart, right? And if that's all you look for, you're going to drive yourself crazy. You're not going to really understand the market. You've got to understand it's everywhere, because machines are, futures market, like 85% of the market is algorithm. So you're going to see this happening everywhere. For you to really succeed in this, master this stuff, and just use the order flow as an aid to get you into your hypothesis. That's all I'm saying. So what I would suggest anyway is, maybe if you kind of agree with me, the thing is, there's no right or wrong. Okay, you can do the cumulative delta section first, but my suggestion is do the footprint first, because what it is, you're going to see that as time has gone on, I've pretty much started using cumulative delta exclusively as my order flow tool. There's many reasons for that. I'll go on into the next slide and I'll explain it. But as my sort of understanding of cumulative delta has improved over the years, and as my focus has gone more and more over the years onto context, and making sure my hypothesis is solid, I've moved away really from order flow. And it's not, and when I say order flow, I just mean at a microscopic level. Okay, I mean this. I mean footprint, depth of market, cumulative delta to some extent, but I just mean this whole section, because don't forget, this is order flow. This is order flow. All of this stuff, right? It's all order flow, obviously, apart from fundamentals. Guys, this is order flow at its most core. All I'm saying is order flow at a microscopic level, because think about it, it's not what I'm doing anymore. My edge isn't just sitting there staring at a dome all day. If that's what you want to do it, but I'm going to tell you that the edge has gone, right? It's just not there. You see people talking about depth of market and staring at it, and honestly, it does make me sad to still see people clinging onto that. It's not there. The technology, the amount of algorithms in the market in terms of algorithmic volume, high frequency trading, etc., etc., is huge now, okay? And the technology is obviously getting faster. Guys, hedge funds are paying billions just to be closer to the exchange, obviously to get latency and so on and so forth. You're not going to compete in that space. I'm not saying don't look at it, just recognize it for what it is. Like I keep saying, use it as the thing that gets you into this. I'd much rather you were like A plus at this and maybe D at this, is kind of thing. You can afford to, like I said, not be perfect with it. I do have a big advantage because obviously I traded the depth of market for a long time, so I understand order flow very well. But honestly, one of the reasons I use cumulative delta exclusively now is because I've realized there's only so many things you can look at, as you'll see, because I want you to do this section after. Let me just have a look at the list of things that I've put together for you. So obviously the ideal place you're going to be doing this is after task 4, 2.6, the dynamic versus static value, part 2. So you've started building some basic hypos. I want you to introduce cumulative delta into that. And what you'll see when you go on to do all the VWAPs, the multiple time frame VWAPs, is that there's so many things you're looking at. You know, you want to chuck footprint on there, you want to chuck XYZ. It's just too many things. And at one point, you have to say, all right, you know, how can I look at the order flow, cumulative delta, without having to necessarily take up so much space and me having to focus on it all the time? And you'll see cumulative delta allows you to see what's going on the footprint, to see what's going on in the dome, but in a little box on your chart. It's unbelievable. I love this thing. And don't get me wrong, you know, I've got the footprint on the side. I'm just saying that, you know, more and more I'm finding myself really, sometimes it's minimized and I won't even look at it and I'll even forget that it was even there. Because like I said, if I've got my 90% solid, I'm using cumulative delta to fine tune, as you're going to see. Do I really need any more? No, sometimes it's nice. Don't get me wrong. I've used obviously depth of market and footprint extensively with this stuff. I'm just saying I've evolved as a trader. I've got better. I've recognized what kind of makes sense, and I'm always trying to sort of fine tune, you know, my efficiency in terms of what data I'm taking in. And it's just become more and more apparent over the years that I'm pretty much getting the same information on cumulative delta that I'm getting on a footprint, that I'm getting on the depth of market. So it's more and more I'm just, you know, kind of weaning myself off that stuff and I'm looking at cumulative delta. But what it is I want you to do the footprint first. And I do apologize, it's called module 6, right? Because what happened is obviously there's 5 modules in the foundation course, and as you'll see, I talk about it. I built module 6 first, the footprint, because initially, obviously, as you know, I was building the pro course and I was busy, and a lot of people had obviously bought the foundation course and I'd sold it as a, obviously, you know, pre-completion. So to be fair to people, I thought, all right, let me give them something like the footprint to get started with. But now the foundation, now the pro course is complete. You know, it kind of makes sense that let me actually do things in the right order. So context first. So as you know, we've pretty much covered everything here. We've done, let's just have a look. We've done auction market theory. We've covered acceptance and rhythm. We've done market profile, volume profile. We've looked at VWAP. Intraday, we've looked at volume profile and VWAP. The thing is, I've ticked off VWAP here, and actually the truth is we haven't covered VWAP from a, you know, longer term or higher. I don't want to use the word time frame, but you know, a longer investment horizon perspective. So people that are longer than a day, basically. So really, that's the only thing left at this stage. Obviously, I want you to now come to order flow, learn about all the order flow stuff. We'll then finish off with VWAP. So like I said, to repeat, sorry to sound like a broken record, but the ideal sort of order that I want you to do this in is obviously stage 1 you've already done, stage 2 you've probably done a big amount of it, and to repeat, I want you doing the order flow now after 2.5, because now you've started building hypos, right? You've seen sort of ideas about how to enter and exit. It now makes sense to introduce order flow into that entry and exit process, because that's what it is, right? You saw me talk about it in the how I enter and exit, as I've said. It just makes total sense for you to combine it with this. But coming back to the footprint point, apologies, bit of a long-winded way of explaining this, but obviously I want you to understand my reasoning behind the ordering. Is what I want you to do is do the footprint, okay? Even though I'm slowly weaning myself off it, I don't use it so much anymore. I'm even happy for you to not use it. But what it is just like the depth of market, you needed to look at it to understand the other order flow components, because it's literally the foundation of it, right? You can see that. Obviously, you've seen volume profile builds up. You needed to see it. In the same way, I want you to look at footprint so you understand delta. Because what you'll notice is in the footprint, I talk about delta a lot. I've built myself a lot of sort of delta information in the footprint table. So look, do the footprint. It'll be a few hours, then come back, do this. I know I've put cumulative delta at the start, the first 2 bits of it, 3.1, 3.2. Come back to this, because once you've done 3.1, 3.2, I then want you to carry on with 2.5 and continue to do the hypo exercises and essentially just add in order flow. Look, that probably sounds confusing, but honestly it isn't. It's incredibly clear and a logical path. So let me write this down for you. So stage 1, right, which is pretty much all this stuff, we've done it, tick in the box, right? Stage 2, okay, which is a lot of the intraday stuff, right? So you've done what, 2.1, and I've got it here in front of me, the intro to VWAP, 2.2, 2.3, the VWAP practical stuff, right? So we've done all of that, rhythm, market condition, 2.4, 2.5, 2.6, so you've done all the dynamic and static value you should have done by now. Task 4, right? So that's building the basic hypos. Do you remember we've got CVA, DVA, line in the sand either side, okay? So at this stage, you've done up to 2.5, all right? So we've done all of that. Now what I want you to do is stage 3. So stop at 2.5, come to stage 3, okay, this stage. And now what I want you to do is I want you to do 3.3 all the way down to the end. So the end of the footprint. I believe there's going to be some examples towards the end. Obviously, I don't know exactly how many examples this will have by the time I've completely finished. I'll try and add a few, but as it stands, there is obviously some live examples. So keep working your way down all the footprint section. Once you've done that, it's going to give you a great understanding of delta, okay? And that means you would have covered footprint, and we've done the dome, right? Can you see? You've almost done everything now. All you've then got left to do, finish the footprint section. Like I said, it's perfectly makes sense when you think of it in terms of the order. Then come back to this video, 3.1, 3.2, okay? So you're going to do cumulative delta, and this is now going to form task 5, okay? Get it? So you've done task 4 here. You're coming in, I want you to finish footprint, just get delta, whatever. You don't necessarily just use the footprint, just understand it. Because what it is I don't want people to think, oh, why has he done all this footprint stuff if he's trying to wean himself off it? It's not that. Guys, you've got to understand, as a trader, you've got to adapt, okay? You've got to adapt to the evolution of the market. And I keep saying it. At the end of the day, I used to be a depth of market trader. I recognized technology is here. That's not where the edge is. And in fact, you know, my results are a million times better now than they ever were on the depth of market. I was incredibly consistent, but now it's taking it to another level, because now I've got this unbelievable understanding of the market from every perception of value. Okay, so it's not a bad thing. I've just evolved with it. Footprint, I was using it extensively. It's not that I've never used it extensively, but I've just recognized, hang on, I've got all the information I need in one place. Let me stop duplicating things and let me just become a more efficient trader. That's what happens as you obviously develop. You start to make your processes more and more efficient, okay? So that's all it is. However, it's so important you look at the footprint, because in this, as I said, in the same way the dome helps you understand all of the things we looked at in the pro course, the footprint is going to help you understand cumulative delta, and this will become clear when you do the footprint, okay? So in the same way the foundation, I guess the easiest way to put it is the same way the foundation course has helped you. You see, you wouldn't have 5% of the understanding of what you're doing on VWAP and volume and market profile had you not done the foundation course. In the same way that the foundation is the very building blocks of stage 1 and stage 2, the footprint is the building block of cumulative delta. All right, so hopefully that makes sense. That's why I want you to do that. Come back to this bit, do 3.1, 3.2, cumulative delta. We're going to do task 5. All task 5 is task 4, right? Developing hypos, and do exactly the same stuff, but use cumulative delta. Okay, so I hope that's clear. So basically you can stop this video now if you haven't done the footprint section. Do the footprint section and then come back to this exact point, and we're going to go straight into cumulative delta on the next slide. Thank you very much. Okay guys, so we're going to talk about cumulative delta, and I've said it a few times obviously in the last slide, but just to ensure that everyone is in the right spot, you've obviously now done all of the footprint, and basically you've just finished stage 2. You've done 2.5, obviously entry versus exit, and then you've done task 4, which was just after 2.5. So you should have been building high post now, CVA, DVA. When I say that, should make total sense to you. Line in the sand. You finish footprint, and now you're doing cumulative delta. So let's get on and look at cumulative delta. And what it is look, I don't want to overcomplicate it. If I'd never done the foundation with you, then I would have spent hours on this. But look, you're all order flow experts now. You spent months on the depth of market. You've obviously looked at the footprint. You understand delta very well. It's obviously just, as I said in the section many times, it's just buy market orders versus sell market orders. It's just a difference, right? All cumulative delta is, right? Now, what it is if you think of what is happening on a depth of market or even on a footprint, right? Let's look at it in one direction. Let's say that the market's going up here in, this is crude oil, but it could be anything. You've watched the depth of market now probably 100 times. Would you agree? What makes the market go up? Market orders eating into pending orders, right? So let's just make up some numbers. Let's just say 100 printed here, 100 printed here, 100 printed here, 100 printed here, and extreme examples, but nothing printed on this side. And it can happen, right? But obviously, just to show the point, nothing printed here, okay, in any of these columns, and then maybe even another 100 printed here. Would you agree? What's happened to the price? It's moved up, right? Now, if you were to plot this, how would it look? So let's have a look at this. Price over time. Again, we're going to exaggerate the point, but it doesn't matter, right? Imagine this took an hour, whatever, right? 30 minutes, whatever you feel comfortable with. It doesn't matter. The principle's the same. I'm just going to say, let's imagine that this took, an hour, as I said, to go from 2509 to 2514. Okay, so it's basically gone up like that. Would you agree? That's what's happened. What's happened to the delta? Delta and time. Now let's remind ourselves, all delta is very, very simple. Buy market orders inside columns, the difference between that and sell market columns, right? So obviously if the delta is positive, buyers are in control. This is why I suggested go and do the footprint first. This will be so obvious to you now. We're just taking the difference, right? So what is actually happening if this was, in 100 contract increments? Would you agree that we've basically, the delta's going what? Plus 100. Then cumulative delta is just adding the deltas, right? So that's another plus 100. 100 plus 100 is what? 200. Plus 300. Plus 400. Plus 500. Would you agree? It's taken that many contracts to move the market up. So delta's moving with the market, right? That's what happens. You see it. When the price moves up, market orders are printing up. Price moves down, market orders are printing down. That's all that's happening, right? So this can be 1, 200, 300, 400, 500, right? And obviously we can see the price here, like 2508 to whatever that is, 2513. It's basically going up. I'm not going to mark the price. And here, would you agree? All we've done is delta's just gone up. Look, 100, 200, 300, 400, 500. You've seen this a million times on the depth of market. Okay, so delta's going up. And this is cumulative delta, because obviously if we had 100, 100, it would just be a flat line. It doesn't make any sense. You're adding obviously the amount of positive delta that you're building up as the market moves up, right? Pretty straightforward. So the delta's moving up, the price move, it makes sense. What pushes price up? Market orders. So it would make sense, the more market orders you got, the more price goes up. And guys, let's look at it the other way. Just very briefly, and just so I can squeeze it in, apologies, I'm going to make it very small. Price moves down, right? Price moves down like this in this section, and this time what? You've seen it. Market orders are hitting the bid side. They're hitting bids, going down, being sold. Markets being sold again. So here we've got 1, 2, 3, 4, 500. In theory, if we had the same amount, should have a similar effect. And again, it's just going to build up, isn't it? So 100, 200, 300, 400, 500. And how would this look over time if it happened over this very slowly over an hour? Price would just be floating down as time moved on, right? That's all the depth of market is. You've seen it. The depth of market is the chart. You know this. I've mentioned to you, you get guys just watching depth of market and not a chart. It's basically just telling you what's on a chart anyway. The only thing I'm saying is, delta is showing us the amount of market orders it's taken to move the market, right? And generally, as you've seen it, when market orders are printing up, the price moves up. When market orders are printing down, price moves down. Very straightforward. So again, here we've got, this time it's minus though, isn't it? Because we're selling off. We've got negative market orders, short market orders, minus 100, minus 200, minus 300, minus 400, minus 500. It's cumulative. It's just adding these up, right? So this time, delta does exactly the same thing. Kind of makes sense, isn't it? Market orders are driving the price down. Market orders aggressively going down. Pretty straightforward, right? So now imagine we could, do you remember I said to you, one of the reasons I've just stopped looking at all this stuff is because I said, I pretty much exclusively started using Cumulative Delta. Because basically, forget I've even mentioned Cumulative Delta to you. Imagine I said to you, guys, wouldn't it be wonderful if I could have this information and how it is affecting price on my chart? You'd be thinking, yeah, that's wonderful, Envy. Wouldn't have to look at this thing. Wouldn't even need to look at the footprint. Wouldn't need to stare at this whole thing taking up space, moving up and down, obviously giving lots of information. That would be wonderful. Where can I get that? Cumulative Delta. All right, guys. So next screen, you're going to see it. I'm basically going to show you this at the bottom of my chart. That's all it is, okay? So hopefully that made sense. We covered everything here. Yeah, we've covered that. Let's go on to the next slide and show you this, basically this bit and this bit, the delta, and then right beneath my price chart. Okay, makes sense when I show it to you. See you in a sec. Okay, so here you go. So you would have seen this on the template I gave you anyway. Honestly, guys, this thing is incredible. I mean, it's basically the depth of market in a little box at the bottom of your chart. It's the footprint, it's everything. It's basically all the information at the bottom of my chart. You can now understand why it's the order flow tool of my choice. I'm going to show you how to read absorption and all the things that we look at on footprint and so on and so forth. I'm going to show you how to look at it on here, and actually it's got major advantages as well over looking at the footprint and the depth of market, which I'm going to show you, and a lot of it comes down to this swing to swing versus micro. But firstly, let's just consolidate our learning and repeat what we said on the last slide, which hopefully you understood, because obviously now you get the depth of market, so presumably that would have been straightforward for you to understand. Can you see it's exactly what I've just described a moment ago? What did I have? I had the price, I had time, which you have here, so you can see the time going along, right? And look, guys, this is hours. Okay, it's hours. What's the price doing here? Price is going up. What are market orders doing? Going up. Really straightforward. What's the price doing here? Going down. What's market orders doing? Going down. Aggressive move down. Aggressive negative market orders. If you watch the depth of market or you watch the footprint, all that would be happening is the delta would be going down. You'd have aggressive negative market orders, right? Hitting the bid. That's all it is. It's that delta. It's the difference between orders hitting the sell side and orders hitting the buy side. When the market's moving down aggressively, obviously it's going to be market orders hitting bids going down. When the market's moving up aggressively, obviously it's going to be what? Orders, market orders lifting the offer or hitting the offer or whatever you want to call it as we go up. That's it, right, guys? So that's basically all the delta is, okay? Cumulative delta is letting me see all the information, but just in my opinion, just the most advantageous way for a human being, okay? I'll keep talking about this, but it's so important you understand that, you know, we are competing against the machines. How can we get an edge? Well, a machine is very good at a very microscopic level. You know, what we are very good at is being able to interpret data at a more discretionary level, but where we have a little bit more time, right? We have to know our strengths and weaknesses. This isn't patronizing anyone. It's logical. You know, I'm trying to help you take advantage of, you know, this ability you have to think incredibly logically when you have a little bit of time to put things together. And the reason I say this, right, I'm not trying to lecture anyone. I'm going to back it up, obviously, with facts, and that is, I talk about this swing to swing. So basically, my point is, I can look at what is happening to delta over this period. Okay, now think of this period in terms of time. I'm talking about approximately just after 10, right, to about 1:30, guys. So, you know, you're talking a several hour period. You know, what is that? It's over 3 hours, basically. You're talking about over 3 hour period. And imagine looking at this on a depth of market. Do you really want to be staring at that thing for 3 hours to gauge the same sort of information? I can literally instantly just look at that and say, yep, oh, okay, the market orders were aggressively sold off. And actually, you'll have delta numbers here. Okay, so it might be minus 5,000, you know, might be minus 2,500 or whatever. So I can say, we're net negative 5,000 contracts, right? That's a strong move down, or it isn't, and so on and so forth. And then you can start to see little nuances, like I'm going to show you. Look, over this period, which again is 1:30 to you know, about 3 o'clock, hour and a half, guys, I can see the market was going down in price, but market orders didn't go negative. Hang on, something has changed. For me to spot this on a depth of market over, you know, a sort of 2 hour period, no, it's not going to happen, right? The amount of sort of like capacity in terms of my mental concentration I'll have to put into just being able to glance once and say, oh, something's not right here, whilst I'm trying to look at 10 VWAPs and profiles. And can you see now why I'm using this exclusively? Because I can see what is going on the footprint, on the depth of market, just at a glance. And where? At the bottom of my screen. Guys, I absolutely love this thing. It's brilliant because it does allow me to see sort of what is going on in terms of buyers and sellers, convictions, and so on and so forth over large periods of time. That's why I say swing to swing. You know, from this swing to this swing, for me to capture that information, even on a footprint, is a lot of data. You know, you've seen it on the Rencos, there's a lot of data. Here I can literally eyeball it and see, nope, any problems in the order flow, Is the market aggressive when the price is aggressive? Yes, it is. All right, things are normal. Price is moving up. Are market orders driving it? Are buyers convinced this is going to? Yeah, it is. Look, market's moving up. Same thing as we went down. Over a period of time, I can sit back, relax over a couple of hours and think, all right, yeah, okay. Sellers over the past couple of hours are driving this market down. And we talked about this a lot. That's where our edge is as human beings, is to really use this amazing ability we have to interpret data and be discretionary with it and make decisions and build an edge over other participants, including algorithms in the market, and say, based on my judgment and my experience of having seen this several 100,000 times or 100 times or whatever, this doesn't quite look right to me. Okay, do you see? This is where you start to develop edge again. It's a great edge you can develop. And also, I've put here micro because you can start to look at sort of micro order flow. So, let's have a look here. So you can start to look at this. Can you see this swing down versus this swing down? That's micro. Okay, so you can start to see there and there. Do we have any problems in the order flow? No, we don't. We move down. We move down. So sellers drove that. They were happy to drive that down. Here we've got, look at this and this. There's a problem here because look, the market didn't break this low, but here the order flow did break the low. We'll talk a little bit more about this, but my point is, this is on a very micro level, over maybe half an hour. Here it's a bit longer because it's the ETH. Remember, this is RTH. So that's why in time that does represent a longer period of time. But here you can see it's virtually like 10 minutes, 20 minutes. This bit, and you can compare it to that bit, right? So that's swing to swing, swing to swing. This is basically just at a micro level where you can start to, over 20 minutes, without having to sit and stare at a footprint or sit and stare at a footprint is obviously better because it does record the historical market orders. We've discussed that. You've obviously just come back off the footprint section. You've seen it, and it can be handy. Don't get me wrong. But for me, rather than looking at that, and it takes up a lot of space on my screen, or watching the depth of market for 20 minutes, even at a microscopic level, I can just say, okay, that looks okay to me. Yep, sellers are, driving this market lower, even at a micro level. What about a swing to swing level over the last few hours? Oh, that looks okay. Is there any discrepancy? Is there any problems? All right, so hopefully that makes sense that, we covered all of this in the last slide, that this is telling you exactly the same information. And what I'm going to do is I'm going to really hammer that point home now. We're going to look at, different types of, I hate the word divergences, I'm going to be honest with you, because of the way it's used in retail. But this is true order flow divergence. And what I mean by that is absorption, things you're used to seeing on your depth of market. So yeah, on that note, let me quickly sort of move on, because I use that word divergence and I quickly want to sort of show you that when I say divergence, I mean it in a completely different way to what you've ever been used to seeing. It's not in the technical indicator sense at all. In fact, I've talked about this a lot, the fabric of the market, market orders, market order divergence versus the price. Okay, so it's very much depth of market divergence, right? So true divergence in its purest form. So let's go on and have a look at that in the next slide. Okay, so we said we're going to talk about obviously spotting absorption. I'm going to show you can spot it on the cumulative delta pretty easily. In my opinion, like I said, my understanding of cumulative deltas rapidly improved over the past few years because I've been watching it so much, and I actually think it's better than the other order flow tools in terms of spotting absorption. Don't get me wrong, at a microscopic level, obviously the dome is the king, but I'm talking about, we're not looking second by second, we're not sitting here staring at the thing second by second. We want something to help us get into our hypothesis, and our context is being built at composite levels, huge amounts of market orders. It doesn't make sense for us to be sitting there staring. looking for absorption at one time. It just makes no sense, okay? You know this, you know, I don't need to explain this to you, and cumulative delta is much more aligned, as I'm going to show you. And the best way to do that is, let's have a think about, you know, and I've shown you examples already, but let's think about what exactly is absorption, right? So let's just pick a price point, doesn't matter. Let's say 25.10, right? It's crude oil, but it doesn't matter what it could be. And would you agree? Let's say if, you know, you've seen this, someone sitting on the offer with, let's say they've got 1,000 contracts, right? 1,000 contracts, and let's make that 1,000. And then they're constantly adding to it, right? So someone prints 1,000, clears them out. Price doesn't move. Why is that? Guy cancels it and adds another 1,000. Okay, someone prints another. So the volume profile here, if you ignore this, the volume profile has obviously got 1,000. Then we print another 1,000, right? And this guy just cancels, and then he puts another 1,000. So that goes up to 2,000. And this continues, it keeps happening. You've seen this. Like I said, you're experts on the depth of market now. Constantly being cleared out, 1,000, 2,000, 3,000, 4,000. You know, the offer shows 1,000, but every time you print 1,000 market orders, another 1,000 appear, another 1,000. This happens 5 times. So then you, as you know, you're going to build up 5,000 contracts at one price level. What is we already talked about the delta, right? So the price is doing what? Would you agree? Time and price. What's the price doing? It's flat, right? It's just stuck at 25.10. Time is passing. You saw this on the treasury market. Time is passing and the price is just flat. It's not going anywhere. What's the delta doing when we're seeing absorption? Think about this. What is the cumulative delta doing? Cumulative, because it's 1,000 plus 1,000 is 2,000, plus 1,000 is 3,000, plus 1,000, 4,000, plus 1,000 is 5,000. What is the cumulative delta doing? It's going up. Right? We know this, 1,000, 2,000, 3,000, 4,000, 5,000. I'm not going to put the numbers. Can you see price is flat, cumulative delta, market orders are printing, they're going higher. Guys, absorption, okay? That's what you see, cumulative delta and price is flat when you have absorption. Other way, same thing. Let's do it this way. So price is here. Forget about this volume profile here. Let's say someone's sitting on the bid. Sorry, they've got, let me do that again. They've got 1,000, right? Someone's sitting on the bid. You do what? You hit the bid and say, fine, you know what? I'll clear you out 1,000 contracts. But hang on a minute. As soon as that goes, another 1,000 appear. Then you think, hang on, all right, let me try again. So you do another 1,000. So here you've got now 2,000 market orders printed here. As soon as you do that, what? Another 1,000 appear out of nowhere at the same price. Absorption, right? So you're building up, you're slamming the bid with like 2,000, 3,000, 4,000, 5,000, right? So you've hit 5,000 contracts into the bid and the price just hasn't moved. Classic absorption. On the downside, right? Short side, what's happened to the price? Same as this. Hasn't moved. Okay. And what's happening to the cumulative delta? What's happening to the cumulative delta? It's actually minus, right? 5. Not on the profile, it we obviously just show as plus 5,000. I beg your pardon. But on the delta, it's minus, isn't it? It's minus 5,000, right? Because don't forget, what is delta? Buying minus selling. What are we doing here? Selling. So it's -1, -2, -3, -4, -5. What's happening to the price? It's stuck. Someone is doing what? Just absorbing. They're happy to sit there. So the price isn't moving, but the delta is going down, right? It's going negative over time. People are selling market orders. So obviously over time, cumulative delta is going to go down. Can you see divergence? This is what I mean by divergence. okay? It's cumulative delta divergence, which is absorption, okay? And look, you might take a time, maybe you get it straight away, maybe you do, but look, it might take you a few goes to get used to this. Don't worry, we're looking at it, I'm going to get you looking at it 100 times on a chart anyway. You'll know it like the back of your hand. Do the practice, okay? We'll have a look at a few examples. Obviously, look, I don't need to go through 100 examples with you. If I show you, just a handful, and then you go on the chart, this is why I said do this as part of task 4, which was 2.5, the entry and exit, and then obviously the next bit was task 4. Once you finish task 4, add this in, right? So the perfect place to add this in, because all those entries you're taking around that first hypo, you can now bring in absorption and stuff, and I'm going to show you that. Let's actually look at this on a chart. Okay, so this is a chart. This shows the first one we're going to look at is the downside example, the one we literally just did. Guys, look, this is why this thing is incredible, because for me to spot, this is swing to swing, right? Here to here. For me to spot this divergence or this absorption, I beg your pardon, it is divergence, but again, that word has been tarnished, and I mean, doesn't really like annoy me because I don't really get annoyed, but it does sadden me that the word divergence has been tarnished. Really, this is true divergence, right? So I'm going to use it. I like to use the word, but use it in this sense, please, if you can. Look at it in terms of the fabric of the market, divergence, not any sort of oscillator or one of these things. It's more to do with true market orders versus what is the driver of the market? Market orders. So market orders can diverge obviously with price when you see things like absorption. The thing is, I love this thing, and look, I haven't got the time slots, but it's obvious. Look, that's RTH, 9 o'clock. You're about a couple of hours. You're talking over 2-3 hours in the session. Imagine trying to spot this on a depth of market over 3 hours. You're just not going to be able to do it. This thing is so powerful. I can see straight away, right, okay, we came down, we sold off in the morning, right? So the delta obviously was down, market orders drove us down, fine. Can't see any problems here. Then as we drove down again, what happened? Hang on. So this could be, I'm just going to make up any price. Say 28.01. Guys, look, price has barely moved. What's happened to the delta? Look, huge market orders. Didn't we just say that? 1,000, 2,000, 3,000, 4,000, 5,000 at what? One price. What's the delta doing? Going negative. Look, classic absorption. Buyers are doing what? Saying, thank you very much, thank you very much. Yep, I'll take that, I'll take that. Buyers are absorbing, and look what happens. Bang, the market goes up. You've seen it on the depth of market 100 times. Now you can see it on the chart. It's exactly the same thing. You're absorbing, and look at the aggression. You can actually see the bars are really thick and red. That is, significant numbers of people trying to sell at what? One price level. Okay. Once you get your head around it, you'll be like, oh my God, that's obvious. Price is not moving down, but contracts are still hitting the bid, hitting the bid, hitting the bid, thousands. So what's happening? People are getting trapped. Sellers are getting trapped. What happens when sellers get trapped and they realize it and price starts moving against them? Oh, oops, I'm in trouble. I got to get out here. Bang, and the move happens the other way. Obviously, also the person absorbing is probably going to get aggressive as well, and so there's going to be all those multiple factors, which we've talked about in the footprint and obviously in the dome section. And then I just want to show you one the other way, okay? So here is exactly the same thing happening, but the other way, okay? So if you think about it, look what's happening here. The market is moving down, and then what do we have? We have barely, between sort of this area, if you think about it, that area of price. Right, let's draw this out. Sorry, let me do this properly. Sort of this, sorry, this pen. Can you see this area of price? It's pretty static, isn't it? Sort of this region here. Price has not gone anywhere, right? That area. Look what has happened here. Can you see that? People are doing what? Hitting the offer, hitting the offer. Keep hitting the offer. And where's price going? One area. So that's 28.01. That might be like 28.10 or something. Okay. And don't worry, we'll do a few examples of these. But the point is, has the price really gone anywhere here? No. Maybe gone up a couple of ticks. But look what Delta's done here. It's got so aggressive, and actually it's been the whole thing, isn't it? You can see buyers are being sort of incredibly absorbed in this whole move. You know, obviously it's not always going to be, and I showed you this, and that's why I actually wanted to show you this example, because I don't want you to get obsessed with single price levels, all right? You know, this is the point. When you started to get into more advanced depth of market, as I showed you in the pound, it can take place, and it typically does in crude, over multiple prices. Guys, it just comes with experience. You're going to have to just accept that, you know. No one's going to sit there and absorb at one price level. You know, it happens in treasuries, but in most markets, it's too thin. You're not going to be able to sit there and absorb. You're going to get killed. It's going to be too obvious that you're doing it. So people do like to spread out their absorption. You can see in this little tiny area, this guy is absorbing. The seller on the offer side, he's just absorbing huge amounts, right, in that little region. And if you look at it here, what's happening there? All it is 1,000, 2,000, 3,000, you know, hitting the offer. Keep hitting the offer, smacking the offer, trying to buy, trying to buy, trying to buy. Look at that, how many thousands of contracts. What have these buyers been able to do to price? Nothing. Classic absorption. What's happened? Buyers got trapped. Boom. Look at that. Okay. Pretty simple stuff, guys. That's absorption. We're going to look at it one more way. I'm going to show you some stop outs, all right, where the price is not generally being, again, driven by market orders necessarily, and you know, price is drifting, but there is no market orders basically driving it, and that's a classic sign of stop outs. We're going to talk about in the next slide. Okay, and this is the final one that I want to show you, and this is my favorite one. I see this all the time. I use this extensively. Okay, I actually prefer this to absorption, and this is another, I keep saying it, but a big reason why I've moved away from using some of the other microscopic tools for fine-tuning to really using Cumulative Delta, because this is very, very difficult to spot on any of the other tools. On here, just because of the nature of it, like I said, you can see things over a period of time. This is much easier to spot. In fact, I think it's virtually impossible to spot this on some of the other tools, except at a very microscopic level. So what I mean by that is, let's have a look at this. So for example here, right, the market is, you know, before we said that what happens, we're at when it's absorption, right, the price is sticky. It sticks at a level, and what happens? The cumulative delta, it rises, right? Because what? People are trying to buy into the offer, and the guys that are selling it, they're just absorbing, and boom, price collapses. Look what's happened here. The complete opposite. Basically, the price, if you see here, the price has just taken out, right? Classic stop run has taken out the top. Look what's happened to Delta. Guys, look at the Delta, right? Let me point this out. It's so clear. Look at the Delta in this move up, Delta moves up. Guys, look at this from here to here. Huge move up in the market. Look at that. There's no one buying, right? Can you see that? Normally when you get long sustained moves, you've seen this. What happens? Aggression, huge aggression. So, you know, if this was really going to be a big move, the Delta would have come down, and the Delta would have just been like that, right? Huge amounts of people would have come and bought it, and anyone trapped on the other side would also have exited. So you tend to see Delta just follow price. You know, we talked about this on the first slide when we introduced Cumulative Delta, that what's happening on the depth of market. Market orders are obviously being filled, and that's what's driving price. So Normally 90% of the time, market moves up, delta moves up, market moves down, delta moves down. Market orders buy, price goes up, market orders sell, price goes down. But hang on, what's going on here? Why have we had such a huge move up and hardly anyone buying? Guys, can you see? It is stop outs, basically. Typically, it's going to be stop outs. Because why do I say that? Well, again, like I said, what forms the basis, the composition of huge moves when you tend to get a reversal, right? So the market moves down and then it shifts gears and suddenly turns around. What is that? That's obviously people that are trapped. That's people getting stopped. That's new buyers coming in. It's basically a whole bunch of people, but generally, majoritively, obviously, it's going to be people that are buying the market, right? And that's why it moves up so much and has a sustained move. Logical. So if you have a move up and hardly anyone's interested in it, who else is it going to be? It's going to be that small percentage of people that probably had their stops above here and they're being stopped out, okay? So it's classic, guys, and I love this. I see it all the time, and if you want to get short, let's say you've got, your CVA, so your value area high of your CVA here, right? And I tell you, obviously, draw them in, like, have this little zonal area here. Imagine you had that there, you're in a rotational environment, what's your rhythm? 1SD, and that happens. And you see the order flow is anemic. Guys, do you see now why I want you to introduce this into your post task 4 and make it obviously the next task? Is because that is going to give you huge confidence to do what? Execute when you're selling it. All right. Now, finally, let's look at it. This is swing to swing. You're not going to see this on a depth of market. You might be saying, hang on, Envy, surely we can see stop outs on a depth of market. Of course you can, but the problem is, think about what you're seeing on a depth of market. You'll be seeing some sort of market order activity there that may be reflective of, a quick move away or whatever it's going to be, but it's going to be very microscopic. Guys, I'm talking about, and again, apologies, I haven't got the time, but that's okay. It's obvious. If we're talking several hours. How are you going to compare this to this? You're not going to be able to do it the way you can on Cumulative Delta. This thing is incredibly powerful. It's not the holy grail. You've got to remember what it is. Have this on your wall. 70%, 20%. This is 5%. But it's something. It helps you execute your hypothesis. It gives you some, I don't like the word confirmation, but it adds to your hypothesis, doesn't it? If you have a strong, and that's 90% context or contextual read or thesis or whatever you want to call it, that this market's going down, you see this happen, hardly anyone's involved there. Boom, that's a stop out. Bang, get in. Do you see? All it's doing is just increasing your sort of chances of success from maybe, let's not attach rigid numbers to this. I'm just kind of giving you a sort of just to prove the point. Let's say that your chances of success are 70%, add this in and it's just gone up to 75%. Do you see what every percentage point counts, basically, is my point. And this is incredibly powerful. Hopefully you can see that swing to swing. Now let's look at it on a micro level, but the other way. Look at that. Okay, something odd has happened here, right? The market's moved down in price, but what's happened to the delta? We haven't had the equivalent amount. You would have expected delta to be somewhere around here. Do you agree? To equate to price. Price broke its low. Why haven't more selling contracts come in? Something's obviously gone wrong. Some stop outs or whatever. There's just no interest in this move down. Clearly, it's like a sort of liquidity hunt, a stop out or whatever. And what happened? We went the other way. Here, obviously, went the other way. So look, I've given you the full arsenal. There's one more thing I want to show you, and then I'll obviously show you some examples on the charts. Okay, so the last thing I wanted to talk to you about on Cumulative Delta is something called being delta neutral, and it just adds more weight to the reason why, really, more and more, I'm only looking at Cumulative Delta in terms of obviously the 5%, the fine tuning, and That is because you won't be able to spot this being delta neutral on your depth of market. You won't be able to spot it the way that I'm going to show you. You won't be able to spot it in a footprint. There's no way you can spot it. And in fact, you can check this for yourself. Go and Google it. You won't see it anywhere, right? You won't see this. This is an understanding that I've developed myself. So look, at the end of the day, we talked about the housekeeping stuff before. I'd really appreciate initially I was even like hesitant to even talk about this, but because it's not out there and I don't want it to be plastered all over forums and whatever. For I've got my own reasons for it. I just don't want it necessarily out there. I'm happy for people to use it. It's not any secret tool or indicator or whatever. I just prefer it wasn't necessarily out there in the public, because like I said, it is proprietary to me, not necessarily in a sort of I'm going to make millions out of it way, but it's just something that I've developed personally, and I just don't want it out there basically all over the internet, plastered everywhere, and oh look, Envy's come up with this, and I just don't want it basically. I've got no interest with being associated with some sort of way of looking at things. That's all it is. So I'd really appreciate, I'm happy to share it with you, but if we just have an understanding that you're just gonna share it with friends or whatever, like I said before, if you feel that they're going to be professional about it and not plaster it everywhere. Yeah, it's just that I don't want, funnily enough, I don't want something out there to be associated with me, because then you get all this nonsense, people saying, oh, you've come up with this methodology, and you've come up with some system, and it's not that at all. Literally, it's just my own understanding of cumulative delta, and you're going to see it makes a lot of sense. And actually, I'm surprised no one else is using. And in fact, there probably are people out there, hedge funds, whatever, looking at this, because it just makes so much sense to me. But I've just never seen it out there, so that's what I'd appreciate if you don't obviously put it on the forums and stuff. But basically, getting on to the point, getting on with it, is delta neutral is what? So at the start of the ETH session, you can use RTH as well, but ETH session, which is what, about 1800, obviously at the start of the session, when the new session begins, maintenance period or whatever, the halting period is over, new session begins. How many contracts have traded? 0. So where's cumulative delta? 0. Okay, so you've got your sort of 0 line, right? If the market's moving up, and I see this time and time again, okay, it won't exactly work like this, but more often than not. So would you agree? Cumulative delta is going up, price is going up, right? So this is our price chart. This is time, this price is going up, and sorry, drew that completely wrong. Let's get rid of that. Okay, and that's our delta, essentially. Now, what will happen a lot, right, is firstly, delta is going to be above 0 because the market's moving up. What does that mean? The market is long. The inventory is long. Okay, I've put here inventory. Then what I have noticed a lot is the market will pull back or whatever, little pullback. Guys, it's uncanny how it does it. It will pull back to close-ish to 0, and then it will get on its way, okay? And you'll see price go up. Now, why it does that, I can only guess, okay? My guess is that it's washing the weak hands. Basically, the market's got long of itself, is heavily long delta. We know this. What is delta? It's just, in an up move, it's just long market orders. Obviously, the market has sort of accumulated so many long positions. What's the inventory? Long. There's no one left to buy this thing. So and the market does this all the time. It cleans out the market, it cleans out the inventory, it resets things, it obviously gets rid of all the weak hands, and to get more buyers in. I see it time and time again. I mean, obviously you see it on the depth of market, but here it's just amazing to see it relative to neutral inventory, 0 inventory. what is the market doing? So it's too long of itself. There's obviously a lot of long inventory. And the market wants to achieve, a target up there. It could be a composite or whatever it is. To do that, it needs more buyers, right? How are you going to get more buyers? What's it going to do? It's going to flush the system, isn't it? It's going to flush. All of these buyers need to be flushed out. So the market's going to drive us back down to what? And it's uncanny how it either goes to zero or it stays above zero. Is my point is that it goes through this sort of inventory flushing process where it's closing out. It's forcing some of these weak hands who have got long and they're not willing to stay the course. They're weak, basically. They don't have that conviction and they're just getting themselves washed out and obviously stopping out or whatever it is. And it will stay positive because the inventory is positive, and then you'll get the big move. Why? Because all of these guys, they'll see it turn around and be like, oh, shouldn't have got out of that position. Bang, I want to get in. You'll also get new participants coming in who have seen this washing process take place. We talked about this a lot in without me getting into this particular level of detail in the I think it was 2.5, forgive me if I'm wrong, but entry versus exit. Do you remember I said I'm looking for clues? I'm always looking for clues. I'm balancing what? Information risk versus price risk, right? This is incredible information that I'm getting here, almost for free. I'm getting this information because it's happened. I might have my pilot position on, whatever. My point is that some sort of battle or process has taken place between buyers and sellers that's reflected in this inventory position. I can see, oh, in the morning or overnight, the market's got long, the inventory is long, the positioning is long, and what's the net delta, the net positioning is long. Oh, they've washed out those early longs and now they're ready to go. Okay, they've cleaned out the weak hands. They've gone through this resetting or flushing process. They've picked up any institutional orders that may be, at lower prices waiting. Let's be honest, we're never going to know the exact reasons. My point is that I've noticed this happening so much that obviously I can't give you exact statistics, but it's reflected in my trading. I'm using this a lot. And this is the final thing that I wanted to go through with you. So, be aware of this sort of neutral position where the market is neither long or short. And in fact, if you see market conditions that are quite balanced, right, a great way of confirming that the market is in balance is you will see the delta going above and below zero. Why? Because market orders are balanced, right? It makes so much sense for the market to be doing this. If I've got strong conviction up, I will always, I don't use it as an indicator. I'm not saying, for example, again, remember, keep coming back to this 70% and 20% and then 5%, okay? It's just giving me that extra little bit of confidence in my thesis. I'm going to be honest with you. If everything lines up here and everything lines up and I think I've got 90% nailed and we're slightly below, I'm going to take the trade. I'm just saying if there's, typically everything isn't going to line up exactly the way you want it to, and you're looking for clues, contextual little clues throughout the day, or even if we go slightly negative delta and then we go above positive, what's that telling me? That's telling me, hang on, the market inventory tried to get negative or short, failed. Do you remember I said failures can tell you just as much as things that are happening in your favor? It's just incredible. I love this thing where it's going above zero. It just gives me confidence. There's loads of little ways of using this. We'll have a look at a few examples. Anyway, so that's enough on neutral. Let me show you this on a chart. So what I plan to do is, let's just have a few examples of all the different bits and bobs we've looked at, the absorption, the stop outs, and then the neutral positioning and how we play relative to that. Then I want you to take this add it to task 4. You've already got cumulative delta. Start looking at this. When you're getting into your positions, I want you to start looking at, what's the order flow, the 5% basically, and how can I use that to get me in or support or tell me actually maybe now's not the right time to press my thesis. All right, guys, so let's get on the charts.